Okay, I want to welcome everybody to our Compound Stock Unconventional Wisdom, Compound Stock Earnings Unconventional Wisdom podcast. And we have our normal group of characters here today, except for Randy, who's doing his annual volunteering for the Phoenix Open. So if you're out there in Phoenix, drop by the Phoenix Open and visit with Randy. So we've got Keith up in the Northeast there, and Cezanne and Joni. And now we don't have Joni today. Joni had to go somewhere. We have Dirk, Marcus, and myself. And we have a phone-in guest, Gary. Gary's up in Boston. So we're going to ask Gary some things in a few minutes and see how he's doing. I always come up with a couple of things I talk about right at first before I turn it over to everybody in here. You know, the thing we talked about all last year was the regulatory thing about the fiduciary rule. Well, it's just getting more confused, getting worse. Now the major companies are all in fighting about it too. And so that's not going anywhere. And they'll never have fiduciary justice, what with the normal broker trend. So that's all there is on that. Here's something that we talk about, and we talk about it all the time. And then an article will come out, and usually it's sort of a brain dead article. And they say the same thing every time. This was entitled, Americans will need 1.5 million to retire comfortably. Now the benchmark before has been 1 million. And now they've discovered, well, that's not enough. Now it's 1.5 million. And we've been talking about that forever and ever because, all these retirement places have you start saving, and you save and you scrape and you don't have any money to live on. You scrape and scrape and scrape. And maybe you'll have $300,000 or $500,000 in 35 or 40 years. Well, that's not going to buy a car. And so now they've discovered that it's going to take $1.5 million and to live. And the whole reason is because of returns. They do mention that, but they never mention anything. It never changes. They come up with a whole article saying you need $500,000 more now. And even then, in 35 or 40 years, it's not going to amount to anything. You got to have monthly return now. And you're not going to make it when you're making 2 or 3 or 4 or 5% a year from a mutual fund or what most of these things produce. When you use the CSE techniques, you're making your 3 or 4 or 5% a week. In the case of Cezanne and Joni, sometimes that's a day on a trade that doesn't take 15 seconds to do. It's just crazy stuff. Let's see, there's another article here. Well, another article on the same thing. They say the old 4% rule is no longer valid. Well, the 4% rule hasn't been valid for 100 years. And now they're trying to move it to 4.5. Now that's going to do a lot of good. So these articles just keep getting, crazier and crazier. And the whole key is you just got to learn how to make monthly return. You've got to make monthly return. Now,
hey, Joe.
Yes, sir.
Just to interject real quick to your point. What the articles don't take into consideration is life expectancy. I mean, you look at someone like myself and my family, I've got relatives that live to be 110 years old. Obviously, I need more for retirement than someone that's going to die at 60. So they don't take that into consideration. The only way that you can outlive your investments is by monthly cash flow. You have to do it that way. Otherwise, you're dealing with a depreciating asset that's going to run out before you die. Yeah.
Oh, you're absolutely right. Absolutely right. We got Gary in here. He's a call in. Hey, Gary, what do you think about the amount of money you're going to need to retire comfortably? Particularly up in Boston, you're going to need a whole lot of money. Let's call Gary.
Yeah.
There he is.
Yeah. It's Boston is one of the more expensive cities for sure. And it's not, and the population is growing so rapidly because of the area, the schools mostly. Smart kids stay here. And so the housing boom has been phenomenal the last 5 years, 6 years.
Okay. Well, we're going to get back to you in a few minutes to talk about the returns and which techniques you've been using also. I've got another article here. Actually, this one I thought was kind of funny. And this was on TV the other day. Harley Davidson motorcycles. Obviously been around a long time, very successful motorcycle. They have a plant, I believe it was in Missouri. And they were showing a photo shoot of the plant, the building, because they're closing the plant down. They had 800 employees. They're having to close it down because the motorcycles aren't selling as much as they used to sell, or as many as they used to sell. And in the photo shoot of the sign in front of the Harley Davidson factory, there was a little sign to the left of it that said, "This is a smoke-free campus." Now, you know, and this is absolute pure financial genius here. You know, my analysis of the situation. The reason they're not selling the motorcycles is that everybody that buys Harley Davidson smoke. I've never known anybody that had a Harley Davidson that didn't smoke. And now the factory don't let any of them smoke in the factory. So it's some kind of like punishment deals. You know, they're not going to buy the motorcycles when the workers can't even smoke when they assemble them. So that was my thought on that. The other thing that's happened this week, and I think it's interesting, is that Berkshire Hathaway, Amazon, and J.P. Morgan have combined forces on medical, some kind of medical plan, and they're going to cover all their employees, which is over 1 million people. And it's probably a very good idea, but it reminded me of back when in the 90s when I was with Merrill Lynch. We were one of the few companies back then. We certainly didn't have 1 million people, but a number of hundred thousands of people, and they had their own self-funding medical plan. In other words, there was no outside medical insurance companies or anything, and it worked out quite well. And one of the reasons they had it is back during that period of time, and maybe it's changed now, but one of the biggest expenses was always heart attack victims. And at that time in history, the largest number of heart attacks appeared amongst brokers across the board, not just Merrill Lynch, which goes to attest something to the fact that they weren't following the fiduciary rule. So now we'll get and talk about some various things. Like I say, Randy's not here today, so we'll start off with Keith. And Keith, before we get around to our guest Gary and find out what he's up to, how's your week gone?
Oh, doing all right. You know what the issue is with the brokers, though, Joe? They were all smokers and they all rode Harley Davidsons. So
That's right. That's a good comeback. You're probably right on that.
Yeah, yeah.
Have you ever known a Harley Davidson rider that didn't smoke?
Not that I'm aware of. No.
I know. I know a few that even drink and drive.
And most of them have big beards like Dirk has right now.
That's right.
So.
Yeah, I think Dirk is prepping himself for Harley. Next time we'll see. You know, he'll have.
He's not long enough to buy a Harley yet, so yeah. Maybe about another week or two.
If you put on a helmet, a motorcycle helmet, Dirk, you'd look just like a beard going down the street. That's all you'd see, is just a beard. You know.
I guess I need a cigarette.
Yeah. Then you'd burn your beard up. So
anyway, so I head up the weekly credit spread platinum service, and we look for credit spreads, and we've been getting into last couple weeks CMIC. It's Iron Condor. This last week, I ended up closing part of it for a slight loss. But hey, that was the smart thing to do given what the charts were showing us, and it was only a 3% loss too. And the put side, I didn't close that, and that's still open, and that should expire worthless tomorrow. So that's good there. Just looking. I
still love that term, expire worthless. Remember,
isn't it great? There are certain things that are good to expire worthless, and certain things that aren't. Yes. And the CSM trades that we look to do, we don't want those to expire worthless. We want those to make a lot of money. Yeah. And got into one of those yesterday that I'm starting to use stop loss orders, and that actually filled this morning with a significant pullback in the tick on that. But I like where it is in the charts, and so the nice thing about the stop loss orders is if it takes a week to get back to where I want to get back in it, I'm not having to pay the time decay in it. So I really like where it is in the charts, and this was actually United Airlines. And so I'm looking to get back in probably early next week once this tick turns around. So I'm really excited about the new technique. I've sort of bucked doing stop loss orders in the past, but you know, the returns that I've gotten on my CSM trades have just been outstanding, except for a few really, really big losses. And it's like, let's get rid of those and let's start using these stop loss orders. And it's great. Okay, I got a loss, but I'm excited about that it kicked in. And now that the ticks continued on down further, I'm not continuing to lose money on it. So,
well, when you say really big losses, when you took it over the course of a year, you actually had huge gains. So the losses didn't wipe out your gains. That's just part of the.
That's right. But my point is, Joe, if I would have used stop loss orders, I wouldn't have to have that problem right now of taking that part of it as in the total returns for the year. So
I didn't hear your seminar this last weekend or so.
Yeah.
Did you introduce that in that seminar?
Absolutely, I did. Yep.
Okay.
And we had about 30 people online for the seminar this last weekend. Had a lot of great questions on it. I think a lot of people learned something on it, and don't know if you've gotten any feedback on it, but I think it was one of the better seminars that I've done on that.
No, in the Cal report, I've already pretty much bunched up all the letters that'll be in the Cal report that have come in. Yeah, you got a number of good comments, and that's important. And people can, if you want to know what he's doing and want to contact him, number one, you can call in here just like Gary has today, and we're going to get around to Gary in a minute. But go to our website, compoundsstockearnings.com, and in the website you'll find out how to contact Keith. You'll find out about what he does, what his seminars are, the dates and schedules of his seminars, any costs if related. And same thing with Joni and Cezanne and Randy. So. Also, you can call in here. Gary did, not today, but call in next time. The number is 214-377-1108, 214-377-1108, or do an email now or anytime to podcast at compoundstockearnings.com, podcast compoundstockearnings.com, and we'll get it right now. And if we can't address it now because you send it in too late, then we'll address it next Thursday. So,
hey Keith, this is real quick, man. On the emails that have come in, Joe said we've had some great comments on what you've been teaching, but also there were great accolades on your teaching style. So good job on being able to communicate to our clients. It's a big benefit to have a really good instructor.
Oh, good, thank you.
And there's a few perverts out there really like your ears. Did you wear that during well, of course it wasn't on TV like it is now. So
I had the webcam on for a good part of the webinar, Joe, so they got to see the fancy earmuffs.
Fantastic. So Zon, why don't you and Joni do that when y'all do y'all seminar? Put the webcam on.
Because we're usually in our pajamas.
Oh, I see.
And they might get confused for Princess Leia too.
There you go.
Right.
There you go. Okay, Cezanne, before we get to Gary, why don't you tell people what y'all do and what your returns? You've got a full month in now, full month in 1 day. I know y'all didn't do anything today, but
no, I don't know. So we teach trade the moment. So we teach the interpreting the streaming charts, the indicators on the streaming charts, and the advanced charts, and then we demonstrate potential entry points for upward and downward momentum. We can trade both ways. And really, we just need movement and good option prices. So for this week, Apple has earnings this afternoon. So we have not had good option prices with Apple. They've been inflated. So we haven't done any Apple trades this week. Joni probably had a Q trade, but I didn't record it. And so I'm not sure what her return was. But our returns anywhere from 1% to 3% per trade, sometimes more. And we trade generally most days of the week, but sometimes, like for instance, during earnings, we don't have trades. So,
okay. Very good.
Hey, Joe, real quick, we do have an email that is pertinent to Cezanne. It's one of the Apple traders out there. It's from a Kathy McGovern, and it came in last week, but after the podcast. And it said, "Good morning. I did an Apple trade this morning. Buy to open the 175 call at 38 cents. Sell to close the 175 call at 45 cents. 7-cent gain for a 15.5% return. Thank you."
How long? Probably 30 seconds or so?
She didn't put her length of trade in there, but regardless, it looks like it all closed within a few minutes, it looks like. So
that's awesome. Thank you for the email.
Well, that's great. It's Kathy, right? Was it
Kathy McGovern. That's correct.
Okay. Yeah. I don't think I've ever met Kathy, but I certainly remember the name. That's great. Okay. Okay. Gary, are you still with us? Hey, Gary, where'd you go? He's probably running back to his microphone. Hey, Gary, are you there? Marcus, is he still there?
No, it looks like the call has ended.
Oh, well, we never got to talk to him except very briefly.
Let me try to call him back. See if he can.
Okay, call him back. Yeah.
Okay.
While he's getting Gary back, Dirk. Many days we have lunch. We have lunch at the same time, same place. So I was having lunch yesterday by myself. And Dirk, is that Gary? What's that? Oh, okay, it's ringing.
There we go. We're trying to get him.
Yeah. He might have been, at work in his car or something.
Yeah, some kind of. Had to go off and make a trade.
I probably so.
Good day, Gary Sand.
Hey, Gary? Is that Gary?
That sounds like voicemail.
Oh, okay. Okay.
Yeah,
Well,
that was a voicemail, so I went in.
okay. Well, maybe you'll call back. Sorry about that. Anyhow, so I'm getting back to Cezanne and her momentum, not momentum, but her trade the moments. So I'm sitting where we normally sit, which is at the bar. And these three people, Dirk, came in and sat down where you normally sit. And they were young guys. And the conversation was really, really kind of cool. Number one, they were talking amongst themselves. I never said anything to them. And they really didn't notice I was sitting there. And they were talking about how they're millenniums. And I'm thinking, oh, my God, somebody that missed being a millennium, And they're talking, something in billions of dollars and stuff like that. Then one of them, a younger one who was drinking water, said, hey, what about this day trading stuff? I think we all ought to get into this day trading stuff. And I read a blog on that. I'm thinking to myself, what we've been talking about, Dirk, and with Cezanne and Joni's moment trading. So Cezanne, we're going to try to promote that to millenniums that you're looking some way to make a fast trade. So, yeah, Dirk, you would have enjoyed it. So, go ahead.
I said that we've discussed what are the emerging markets right now, and millenniums are they're looking for something that doesn't take much time. So
absolutely,
the trade the moment TTM trades are right up their alley.
Something they can do from their parents' basement. So
or from their phone.
Okay. Okay, well, Keith isn't here. Cezanne, we've talked.
Keith is there.
I see Keith.
Keith already talked, though.
Keith, I mean Randy. Randy's not here. So, but no, Keith, I just really, and like Dirk said, lots of my standing emails. He did a super good job weekend. And Cezanne and Joni, you had your seminar on Monday, and I got to listen to parts of it, and that was a good seminar too. So, good seminar. Okay. Well, I'm very sorry about Gary. At least we got to read an email. So,
hey, Joe, you may want to talk about the intro webinars on Tuesday night that Randy teaches.
Okay, he hadn't been doing those. There's been some schedule conflicts, and so I don't know if we have one scheduled for this coming Tuesday. Okay.
Actually, but to that point, though, you can go to our website, and the last show was recorded and is posted online. So even though if Randy's not able to do one that week, you can go watch a recording right off our website. All the same information, everything is there.
Yeah, because they're there all the time. So, gosh, they go back for years, I guess, don't they, Dirk?
Well, the Tuesday night, it's a recording of the actual show. But I think what you're referring to, Joe, is all of the old radio shows we have archived out there, all the podcasts, all the interviews we've done with clients over the years. If you're interested in kind of seeing the history of CSE and what people have done, go check out the radio show archive, and you can hear all those recordings.
Okay.
Yeah, and they do go back years, literally.
What we probably should do is have the office send out that Tuesday night, and just mention that it is a recording of the introductory seminar. So because didn't they used to send out a notice on that or something?
Just to people that were registered for it, but.
Yeah.
Well, the people that are on our mailing list are already clients, and these are for new clients. So,
okay. Dirk, Keith had asked me anything new on the charting, advanced charting, and I told him, and you hadn't come on yet. I told him that you keep track of that, and the last that when we were talking a few days ago, well, a couple of weeks ago, they said it's going to be a couple of weeks. And so I had mentioned on the last podcast when you weren't here that it looked like maybe we'd be having a home run here sometime in another week, which would be probably tomorrow. And then our conversation with yesterday, that's true, but they got to have a week or so of actual testing during real market hours, and that's where we are now.
Yeah,
So,
and then so Keith, I will be sending you out a username and login yourself. After they complete their testing, they want our people to look at everything before we release it to the clients to make sure that everything is in top notch and the migration is complete.
Okay, good.
So that'll be the next step.
Hey, Dirk, will the screeners and all have the new feeds also for the NYSE?
Right now, Keith, it's just advanced charting that's moving over. The rest of them are on part to follow.
Okay, thanks.
Yeah, that's a massive job of doing what we've done, and it just takes them, and of course we got to make sure it works right,
Yep.
So yeah, but they're good. They're a good outfit, and so it's going to work out just fine. Well, Keith, what you might do if you can, just kind of send me an email that I can put in the editorial part of the Cal Report, which will go out tomorrow afternoon, about, because there were people that didn't attend your seminar, and just something that just mentioned that you taught this technique during your seminar, and this new technique, and how well it seems to be working, something like that. Just give you a little more attention to it.
Okay, we'll do. So,
because that goes out to thousands of people, and you didn't have thousands of people attending the seminar. So,
okay,
very good. Dirk, anything new coming up from your angle?
No, nothing right now. I mean, you can always check out our website, www.compoundstockearnings.com, and go to upcoming seminars to see the complete schedule. But right now, we got a weekend off, which is nice.
Yeah. And Gary, if you're listening, Marcus, you have Gary's number, right?
Yes, I do.
Okay. Well, Gary, we will give you a call next Thursday, and if you're available, then we will have our conversation. I'm sorry, I just kind of rambled on. Talking, and should have thought, well, maybe you were in your car or on your cell phone or at your office or something like that. So
he's probably just fully focused on the upcoming football game Sunday with the Patriots or something, being up in Boston.
That's true. That's true. And that's one of the reasons we didn't have the seminar for advanced charting, right, Dirk? Because we had a lot of response. People didn't want to do it this weekend. Cezanne and Joni's are going to be doing it, and we got to work out a weekend with them. But we didn't want to do it this weekend. So
yeah, Super Bowl weekend is one of the least. I heard today on the news that the effect to the U.S. workforce, over 10% of people will call in sick or will be late for work on Monday following the Super Bowl.
Yeah,
all due to hangovers and not feeling well from overeating and staying up too late and things like that. So, not a good weekend to try and teach anything productive.
Well, and that's why we didn't want Cezanne and Joni to do it, because
they're calling in sick Mondays.
They're going to have all those problems.
Yeah.
So, Cezanne, any last minute word you have other than you're freezing to death up there in Arkansas?
No, we're looking forward to Apple's earnings this afternoon, so that the option prices will go back to normal.
Yeah,
and not be inflated.
I think all of y'all do a fantastic job, even given since the first of the year, both last month for you guys and Randy too, who's not here to defend himself, has had excellent returns, and Keith. And given his first year is always really tough. Not only do you have a lot of non-market days, New Year's, and after that, something else comes up, and then earnings come up, and so the market's always in kind of a hysteria, phase. But it'll work out, be just fine.
Yeah, Joe, that's an important point too, because I think all of us talk about those tough times it is to trade, and it's best to sit on the sidelines for it, like with Cezanne and Apple, with earnings, to understand when those are coming out and how that affects can affect the market. Even yesterday's FOMC interest rate thing moved things a little bit after that report came out. So. Mm-hmm. So just understanding that and knowing what to expect on these, you get all that information for each of the instructors on their webinars each week too.
Absolutely. Appreciate that comment. Everybody remember to write Harley Davidson and point out that if they would let the workers smoke in the factory, I think it's in Missouri, that you'll buy a Harley, And last week I think I also talked about the robots, And now they have robot pole dancers. And Marcus brought up that now they have robots will race motorcycles. I mean, actually a real motorcycle. And so I think that's interesting too. So that's even probably better than pole dancing. At least pole dancing, you just go up and down. That's it.
There you go, round and round, motorcycle racing.
That's right. That's right. Okay, very good. Well, listen, thanks everybody for being here. And we will see everybody next Thursday. And Gary, we will give you a call next Thursday if you're available. We'd like to really talk to you. So thanks, everybody. Bye-bye.
Thank
Okay,
you.
have a great week.
Okay.
Bye.